Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. Me, Ryan Huang. Now, it's been quite a choppy ride for oil prices in the past week or so. We've seen prices ease on tariff uncertainties as that weighs on the global growth outlook and the demand picture. On the other hand, headlines around geopolitics in the Middle East have weighed on the supply side of the equation to support prices. Well, where do things go from here and what is the impact on ASEAN, especially Singapore? Let's check in with Lavanya Venkateswaran. She is the Senior ASEAN Economist for OCBC Bank. Lavanya, good morning. How are you doing today?
Good morning, Ryan. I'm good. Thank you for having me.
Yeah, great to have you on because we are tracking what's been playing out in the Middle East. And of course, that has had an impact on oil prices. Just taking a look at where prices are right now. If we check in on Brent, on the month, it's up some 5%, but year-to-date it is down some 7%. How will you place where oil prices are moving towards?
So our house view is actually that we are looking at WTI to average about $64 per barrel this year, and for Brent at $68 per barrel this year, which means that relative to where we are currently, for Brent at least, we're more or less where our forecasts are. But for WTI, we're seeing a little bit more downside.
So what would be the key drivers you'll be looking out for as we head towards the rest of the year?
Like you mentioned, geopolitics has been quite unpredictable, volatile even in the last couple of weeks. The atmosphere in the Middle East is still tense, and we cannot completely rule out the closure of the Strait of Hormuz at the moment. But the truth has settled in this uncomfortable, easy situation. So we just have to wait and see what happens with geopolitical tensions. For the moment, we're assuming that they do not escalate. And on the more fundamental supply and demand side, we're actually seeing supplies as relatively comfortable enough to meet demand for this year. That said, the oil market has experienced a bit of tightness compared to 2024. So I think what happens with the OPEC meeting going into the weekend will be an important consideration because OPEC is starting to unwind some of the production cuts we saw them put in place last year.
Yeah, OPEC has been trying to get production back online to some degree, at least returning supply. What's the urgency there on that front? Do you see that happening as we head towards the rest of the year?
Yes, I think at the moment there is a sense that they will slowly unwind it. It's not going to be rapid and it's definitely not going to be a spike in production. But there will be gradual unwinding of the cuts that we've seen, which will help stabilize at least the supply side of the equation.
Okay, talking about the supply, let's turn to the demand picture. All the tariff talks, all the expectations of what it might mean in terms of slowdown, some even say recession. How is that picture for you right now when you look at the demand side of the picture?
The demand side of the picture is quite mixed overall at this point, and we're seeing this particularly because, like you mentioned, there are a lot of uncertainties that we're grappling with at the moment. One is on where reciprocal tariffs eventually land, particularly for our region. And the trade deal we saw with Vietnam overnight suggests that we're probably going to land somewhere in between the reciprocal rate announced on the 2nd of April and the baseline of 10%. So it's not a best case, neither is it a worst case situation, which leaves a lot of outcomes on the growth front open to interpretation really, because even what we saw with Vietnam yesterday, the deal was very clear in terms of its objective of trying to close a loophole, right, with transshipments, and a 40% tariff would be imposed if transshipments were found to be true. So I think the bottom line is that we're dealing with a modestly slow growth picture globally, and specifically for the ASEAN region, since the 2nd of April, we've actually cut our growth forecast quite consistently across the board. And even though in a more recent publication, we did raise the forecast for Vietnam, modestly taking into account a very strong first half growth picture, we still think that the general balance of risks are to the downside, just given the heightened level of uncertainty. Once this is cleared with more trade agreements coming through, we'll get a better sense of where we land in terms of the exact growth numbers.
Okay, so let's play out the various scenarios. So if we do see oil prices move up higher, how sensitive is it for the ASEAN economies, especially Singapore?
So we have seen a degree of sensitivity differs across the economies, depending which economy you're looking at, of course. Now, we do think that the most sensitive economy in this region is actually Thailand. When you're looking at the direct impact of oil prices, the first channel of impact tends to be the trade balance for most of these countries, right? Because that's where you see the immediate price and volume effects hit. And in Thailand's case, it is a pretty large net petroleum importer compared to the rest of the region. followed by Singapore, in fact, and then the Philippines, Vietnam, India, Indonesia, Malaysia. However, the one thing to state here is that at least in Thailand's case, a lot of it, the importation is crude imports and a little bit of exports in terms of refined products. So it's similar for Singapore as well. But we do think that the impact, at least on the current account side, is greater for Thailand than maybe Singapore even, because the Thai current account is more volatile than Singapore's current account, which has been in a surplus for some time now. So I'd say that the first impact is on the external front, after which you see the impact on the inflation front. And on the inflation front, what tends to happen is that there are certain economies in this region, particularly Indonesia and Malaysia, which have subsidies in place. So they do not pass through the full impact of the higher oil prices onto retail fuel prices. By contrast, however, Singapore and to a certain extent recently, we've seen even the Philippines have no subsidies in place. So there is a direct pass-through from higher oil prices onto domestic retail prices, and these economies will feel the pinch of inflation faster than regional peers. At the same time, for economies like Thailand, what tends to happen is they have a quasi-fiscal fund which supports or helps cross-subsidize the impact of higher oil prices. So fiscal policy tends to be a shock absorber for economies like Indonesia, Malaysia, Thailand, and even India to a certain extent, but not so much for the rest of the economies. So broadly, fairly mixed impact across the region in terms of both the trade balance as well as the price pressures.
Okay, so oil prices are definitely one to watch. All right, what is the interplay like between oil prices and where the strength of many of the Asian currencies are right now? Because we've seen the US dollar weakening to some extent, and that conversely has seen many Asian currencies gaining ground. What does that mean for central banks in Asia? Where does this leave them?
So our broader view is basically that diversification out of the dollar will continue, and we have seen that play out in the first half of this year. In fact, our view is that the dollar had one of the worst performances in the first half of the year in the last 20 years or so, which suggests that basically there is some room for Asian currencies to appreciate, and that's what we've reflected as well as a house view in terms of our baseline forecast. For central banks, essentially that means, central banks, particularly like Bank Indonesia, which is quite focused on the currency, has some room to maneuver because it gives the IDR a little bit more breathing room and it gives BI a bit more room to cut. So we do think that BI will cut by another 25 basis points for the rest of this year. In fact, Bank Negara Malaysia also has a meeting next week, and we are looking for a 25 basis point rate cut, which is a close call, but it could come either at the meeting next week or it could come a little bit later in September. But generally, the room for rate cuts has clearly opened up for the region. Most central banks are sounding more dovish and more inclined to support growth overall. So we have a path of more rate cuts across the region. The one central bank that I'd probably highlight here is the Bank of Thailand, because apart from the external headwinds that we've seen, domestic headwinds have also intensified. And while our base case is for another 25 basis point cut from the Bank of Thailand, we do not rule out further cuts, particularly if perceived domestic political uncertainty continues into the second half of the year.
All right, a great outlook for where oil prices are going. And we've been in conversation with Lavanya Venkateswaran. She is the Senior ASEAN Economist for OCBC Bank. Lavanya, thank you so much for your time and insights this morning. Great chatting with you.
Thank you, Ryan. Thank you.
All right, catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.